So they had a nice beat. They beat on both revenue and earnings by actually quite a lot. The earnings of 48 cents beat analyst consensus of 29 cents. It looks like a lot of the Toys R Us issue has been worked out of the system, at least in the U.S. operations. Some overhang and difficulty still with what's going on in Europe. And then some interesting comments here from the conference call about Chinese production. Right now, most of the company's production for their Hasbro toys is still done in China, but they've been working on lessening that over the years. Not tied directly to tariffs, but just in general diversifying where products are made. So they said that about 30% of manufacturing right now is outside China. So that means 70% is inside. They're working towards 40% of manufacturing being outside China. They're not giving specific territories, countries, or even companies that they're looking at, but they've identified other places where manufacturing could be done to still meet their high quality.
So costs were going up in China, labor
yes,
costs,
exactly, sure.
However, you have to think also that tariffs would have an impact, right?
Yeah.
If you're producing there and the president wants to put tariffs on anything produced there, you produce it somewhere else so that you can still bring it in here without the tariffs.
Exactly. And so a lot of retailers over time have been diversifying for that very reason, because costs have been going up, labor has been getting more expensive. They're looking at Bangladesh and Vietnam, Cambodia. Those are some of the regions they've been looking. Actually, Pakistan is another area for at least some apparel manufacturing. But as tariffs come into play, that increases the costs even more. The problem is, as we've been talking about, it's very difficult to move big manufacturing quickly. So it's been happening over time, and a lot of these retailers right now are just using the lobbying groups to get to Congress and to get to the administration to explain how hurtful this is. In the meantime, doing what they can, continue to move their production out of China, but it's not going to happen fast if the tariffs do come into play. There's going to be some pain.
Margins came in better than consensus estimates. Was there any talk on the call about input costs, namely oil costs?
That's a good question. That's a good question. I'll have to review more in detail. I will be honest, I didn't get to catch every last bit of the call. It lasted for a bit of time, and I had to pop in and out. But they did talk about gross margin and how they said that there's nothing stopping them from getting back to 62% gross margin. And so that's a goal that they've had in mind. They want to get back to that point. So fairly optimistic, most of the call from the CFO and the CEO comments. Analysts trying to get them to drill down on tariffs, but they weren't really giving any specific numbers and saying, hey, we've already been moving out of China. This has been a goal for a long time.
Investors seem thoroughly
pretty happy.
Yeah, best day since
about 14%.
Yeah, exactly, since February, I think.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.